Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Thursday. And we are now on the 18th of October, 2018, just after 4 p.m. Central Daylight Time. So the settlement prices are all in, and what a crazy day. I was on Fox again today. It's rare they get me day to day, and they did. Because yesterday I said I just thought we had a Fibonacci bounce and that the market could pull back. And they asked me what I thought of the markets today, and I said, you know, on a break like you're getting for individual stocks, and I'm a commodity broker, certainly not a stock broker, but this is where you're going to get some low-hanging fruit of the stocks that you want, and you go pick them up. Nothing changed. The economy's very strong. The break you're getting is a culmination of China weakness, China currency breaking down, and the U.S. allowed it to break by saying yesterday they're not a currency manipulator. It was a veiled and let it drop if that's what you have to do. Looking to see with what's going on with Mr. Khashoggi, and obviously Saudi Arabia's got its hands full. Italy challenging the full European Union, saying, "Now we're not listening to you. We're going to spend like mad." And of course, no Brexit deal. You put it all together in front of midterms, and you get crazy action. So what we're getting is a pretty good-sized correction in the market. If you think about it for the week, we are up. We're up 3.5 points, not much. And if you go back to last week, you were down 125 just for that. The week before, you were down 25. Week before, are you getting the point? So it's a feeble bounce at best. It is not how bottoms are typically made, so we can go down. When I look at what Fibonacci numbers did, and many of you understand these, the beauty of it is from the low to the high, you're looking for your 38%, 50%, and 62% correction. This is called a box. And what happens is you get into this area, and that's your first resistance area. Do we understand that? The higher box is from the 50 to 62% area. And that's how I'm reading the market. It got into the first level, and that's resistance. It all gets blown out with a different chart pattern. You're not there at this point in time, so the market's still under that original selling pressure. Yes, we have a pattern where the swing lines got higher lows and higher highs, and that has not been taken out. So there's reasons for some to still be looking at a market that could be rallying more. The market did not make it to the 100-day average. It certainly made its way back down to the 200-day average in gray here, and in fact came and closed slightly under it. Okay, but we know that's a zone that the market's been fighting at. When we take a look at the Bollinger Bands, the next Bollinger Band low is around 27.23, getting dangerously close to this old break low that we had. By the way, if you take out that low, you don't have Fibonacci numbers anymore. You got to throw them out. And if you look at momentum, momentum came out of oversold, and it is stalled. So we have a market here that's interesting, dangerous as can be. I imagine it's a better day trade market than a position market. When we come to the NASDAQ, it went right back today to the 200-day average and basically held it. So it got up yesterday within a hair's breadth of hitting the 100-day average, pulled back down. Again, it's a market that worked out of an oversold condition. It's no longer oversold. If this market comes in and takes out the 70-60 area, you got to be nervous that you're going to make a run for the lower Bollinger Band. Could happen. I'm not saying it will. And then this low. So who's in control? I'll let you figure that out. I don't know. When I got the swing line up and bias down and momentum not doing much, I don't know. In the Dow Jones, again, you came back challenging that 200-day average of closes. A lot of traders pay attention to the 200-day moving average of closes. So I watch that. Is it the all and give it everything? It's important. It's going to get a lot of press, and that's what it did. And if you get my newsletter, you know that's what I wrote. And you watch. You're going to get the press off of it. So this market is, I wish I could say it was caught between the 100 and 200. It really isn't, because it got over that, but it didn't have any pop to it at all. And in the Russell, you are still in a clear-cut downtrend, oversold admittedly, but lower highs, I think you see those, lower lows. You're targeting a new low if the market wants to run to the lower Bollinger Band. And what would end the trend down, or at least put a big what's going on, would be taking out 160210. On the way back up, if you cleared that, you've got pretty formidable resistance now showing up between the 18-day average and the 200, between 1631 and let's call it 1628.5. In the VIX, you made a run for the lower Bollinger Band, couldn't get there, and today you had a big update, 15%. At one point, this market was up in the high 20 percentile, but it slipped there. The market still has a pattern of higher lows. You can see them now, higher highs over the 18-day average. Support is the 18-day average, but the bulls control this market right now. In the T-bond market, you've broken down with a pattern of a higher high and a lower low. Momentum is flattened out on you. In the 10-year note, all you did today is run back to the 18-day average, and you could not hold it, and the market is still staying under it. It's still in a downtrend. You'd have to take out 118.09 to end that downtrend. TLT in a downtrend. Lower highs, lower lows. The market has worked itself out of an oversold condition by just a little bit. These numbers are above 30, so they're not oversold. If you drop much, you're going to go right back into oversold territory. As for the dollar index, it fought, as we can see here, all these days against the 18-day average of closes, and the market on the news, I think, the China stock market broke again, the renminbi is coming down, seeing what Italy is doing, and then hearing today that Brexit is going very poorly, and that's what it's doing. It's going very poorly. You've got a situation where the dollar got a bid, the momentum's up, not necessarily the trend, but you're caught in between upper Bollinger Band and 18-day average of closes. The eurocurrency's got a reverse pattern of a higher high and a lower low. It's now in oversold territory. It doesn't have much going positive for it between Brexit and Italy, and if the market wants, it might run to the lower Bollinger Band again. The British pound entered bear territory. It's now got lower highs, lower lows, momentum down, bias down, 2 layers of resistance above it. Target, if it gets down, 129.97. Japanese yen today caught a bid with safe haven buying, just like the gold did as well, by the way, but you're not trending. You got a higher high and lower low. You're keeping an upside bias, but you're not trending. In Bitcoin, the battleground is on against the 18-day average in this long, drawn-out sideways action in the market. The trend temporarily down. Lower highs, lower lows, under the 18-day average. Momentum just flat on you right here. Even if you take out 64.80, the last rally high, and get back over that number, what would happen is you still end up with the lower low and then a higher high. So the bears have control now. They got to hold it if they want to do anything. In the energies, while we're seeing the spread move out to the upside, if you look at raw prices, they're still breaking in all these markets, which is fascinating because I think what the market is saying is the Saudis can't weaponize energy, and they're not worried right now about Iran. You talk about schizophrenia. We were just hearing all about Iran this whole time up there. We're losing the oil. What the heck changed on all this? Did we find a lot more oil? No. But what's changed is China slowing down, and other world economies we're fearful are slowing down, and that's what's, for the moment, grabbed hold. It doesn't change my thinking that the pros are taking money off the table on the short side here. That's exactly what I think they're doing. Same in the rebob. You've hit your lower Bollinger Bands. Nat Gas hasn't done it, but momentum has changed on you, and momentum often changes in terms of the price oscillator stochastics before price does. So you put it together, you try to come up with a game plan, and I think we do that. I know so many of you that watch this love that I've put back on the Fibonacci. I am telling you, there's as good a tool of it called Chart of the Day, and you can do this yourself. It's the way the formula is set up. And what this does is you'll get a certain formation like this. You get a kicker back up, and then it lets go. Like a Fibonacci, but different formula. You get ideas of where the market might head. It is not a trigger to enter. It is a trigger for exiting. And I think Fibonacci is very much the same thing on it. How do you get it? Give us a call. Go to our website. We'll send you the PDF, let you get into our charting software to do it as well on your own, by the way, and you can click up here. And then we do send out 1 or 2 charts of the day every day of the week to give you an idea. Cover the name of the chart. Look at the formation. You'll learn a lot. I'm Ira Epstein. Have a great day.